following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How
man.
are you?
Yourself?
Oh, very well, thank you.
That's awesome, man.
Thank you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Don't take anything personally. Transform your life. When you refuse to take things personally, you avoid many upsets in your life. Your feelings of anger, jealousy, and even sadness will simply disappear if you don't take them personally. That's a tough one. It's the name of the game, though. Market-wise, let's take a look at it out here. We have the Dow Industrials down 41, NASDAQ off 2.5, S&P's down 2, gold contract down $9.80, trading at $1,347 an ounce. Silver down 40 cents at $19.34 an ounce. Platinum down 15 bucks at $1,115 an ounce. Copper flat at $2.18 a pound. Light sweet crude up 27 cents, $48.49 a barrel. Bonds 10-year notes down 14 ticks, 131.29. 30-year bond down a point at 171. Now the notes and the bonds, folks, are going after a potential B point of an ABC structure on the way down. The way they're trading out here right now, it looks like we're going to go after this Monday. King dollar up 346 ticks, trading at 94.48. The euro is at 113, and the yen is trading at 100.21. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so the SPY is trading down 24 cents, sideways move, 52 million shares. Yesterday we go up with 52 million. Today we go sideways with 52 million. You take a look at this on the weekly basis. This is what you have. We've been the same place since July 15th. The week of July 14th. The week of the 14th, on a weekly basis, we did 460 million shares. And this week, we're going to do all of 290 million shares. You close out here, we're at $218.62. Bottom line, you close out here, it's subtle, but that'll be a failure. Why? Because you get over the highs of last week, you're going to close under them, you have lighter volume, all of the above. So it's pretty wild. And in fact, that's the last 3 weeks. NDX 100, the 3 Qs. What do you have with the 3 Qs? Same setup in the 3 Qs. It's pretty evident in the 3 Qs what you have happening. It's pretty wild, actually. We had made a high on Monday. We made that high with 11.7 million shares. We come down on Wednesday, and you come down with 15 million. Well, guess what? Yesterday, we go up with 10 million. 10 million, okay? Bottom line, we're down with 13 today. We take this and we put this on a weekly. What you're going to see on the weekly is this. So this week we're going to do about 67 million. Last week you did 72 million. The prior week you did 86 million. Prior week you did 101 million. Bottom line, that's going to be a failure on price and volume. What you can also see is that you're up at highs. No one's in the store buying the product. What is that set up? That sets up toasted and roasted at highs. Gold contract. What do we have with the gold contract? What do you have with gold? We had wide price spread today. You did 171 million shares. We've had the high was 1357, low was 1342. not a bad setup. But bottom line, looks to me like you're going to be going after the 13.18 come next week, and more than likely we're going to be running down somewhere about the 12.88. Now, what is that all about? Well, let's go over to the bonds, because what we haven't seen here is this. We haven't had an ABC structure down in a huge amount of time. We're talking a couple years in the bond market. So the 10-year bond and the 30-year note, the 10-year bond, the 10-year note and the 30-year bond, okay, is set up to make a run for this B point of an ABC structure down, and I expect we're going to see that. We're going to probably see it Monday or Tuesday. Right now, we're at 131.29. The B point is 131.19. That B point is 1.2 million contracts. Today we're down about 900,000. Hasn't hit it. It's building cause to get down into it. The 30-year, same type of setup in the 30-year. We have with the 30-year. 30-year is down a full point. We've hit 170.14. That B point is 169.31. Same type of setup. The thing that is pretty wild is this, is that, and you can see the divergence in the market out here today. You have the market that's slightly lower and bonds that are lower. I suspect what's going to happen here, folks, is that it's going to be the bond market that's going to spook the broad market, meaning the Federal Reserve can't spook them because the Federal Reserve has called wolf so many times that they're going to go up on the rates. It's real possible that if we do take this B point out of an ABC structure on the way down, the market itself will price in a quarter-point rise inside the rate structure. King dollar. We go over to King dollar, and what you'll see, if in fact the bond market goes down like that, you'll see King dollar get some juice. It hasn't got it yet. What we have with King dollar is trading at 94.47. Where it broke topside from was 93.73. Now, we didn't make it down to that level. We made it to 94.05. So that's approximately 1/4 penny, 250 ticks away from that area. 23,000 contracts today. That is not a lot of contracts for a bounce. Now, we put this onto a weekly basis, and what you're going to see, I put it on a continuous contract. What you're going to see on a weekly basis, different setup. On a weekly basis, like, okay, you still get 3 higher lows rather, from the low that was established in the dollar in May. That low was established at 91.88. Then the next low was established on June 24th, which was 92.02. The next one very well could be 94.05. So since May, what we have had is that you've had the dollar establish 3 higher highs and 3 higher lows. And that basically is the definition of an uptrend. Silver, what do we got the silver? Silver was giving us a good indication yesterday that the gold market wasn't going to hold. What we have with silver is this. Silver has gone after its lowest swing point of $19.27, and guess what, folks? Took it out with volume. Silver is at $19.34. Silver's going to make its way down to this $18 mark. You can expect some high volatility next week in all the markets. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow's down 43. Nasdaq's off 2.5. S&Ps are down 2. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We have the Dow down 42, NASDAQ off 1.5, S&P's off 2. And if you want to see, folks, okay, how bottom line inside the press without really checking something, you know, Bloomberg's normally pretty good, because the amazing part is that it takes about 2 seconds on Bloomberg to find out, you know, what, in fact, number-wise these companies are taking. And so I was in the car earlier just running out for lunch, coming back, and I heard across Bloomberg that an analyst come out saying, you know, the 2 private prisons, GeoCorp and Corrections Corporation of America, they were talking about one had bounced 23% today, one had bounced 12%. They both were down 40% yesterday. They were down 40% because of the fact that the Justice Department is going to phase out federal contracts for prisoners in the federal system. Well, bottom line is that I'm listening to this, and an analyst comes across saying, hey, it's only a small part of their business. So I got to read you the story. Okay, companies that operate private prisons began to recover from Thursday's historic plunges as analysts said the U.S. Department of Justice planned to phase out federal contracts with the operators would only affect a small part of their business. Correction Corporation of America Real Estate Investment Trust, that is the nation's largest operator, rose 13% to $19.78 at $2.16 New York time after tumbling 35%, the biggest drop since 1997. GeoCorp, another REIT that operates prisons, halfway houses, and related facilities, gained 21% after falling 40%, the biggest decline in 22 years as a publicly traded company. Here's the quote. The massive fall-offs in stock imply that the risk will spread to other federal, state, and local jurisdictions. Ryan Milliker, an analyst at Concord, generally wrote in a note to clients Thursday, while this is possible, we believe that it is unlikely. The stock plunges, he said, were more based on fear than actual cash flow risk. Corrections Corporation and GEO Group grew as the federal prisons began to hire private operators a decade ago to cope with the soaring prison population. Okay, so check this out, folks. This right in here, the stock plunges, he said, were based more on fear than actual cash flow. Well, the amazing part that this writer actually let him get away with that, because right on the Bloomberg, guess what? The bottom line is that their revenue from the prisons, from the federal prisons, in both cases are over 50% of their revenue. So it's like a joke. Bottom line, you know, and that's something. So if you are a fundamental, you know, trader, bottom line is that you better make sure that you do your own homework on some of that, because that's, you know, bottom line, you take it for what it's worth, but it's a problem. Some of the higher volume stocks we got out here today, you get Advanced Micro up 59 cents, Applied Materials up $1.88. You have Marbell down 39 cents, Deere Corporation. So let's go to Deere. This is going to get interesting here to see the whole Deere thing, and this is why, folks. Deere is up $10, right? They come out with monster numbers, man. Trading at 87.34. So here's the numbers, right? Okay, the estimate was 94 cents. They come out with $1.55. Now, you got to remember something. Deere makes their money by construction, by forestry, by mining, by farming, okay? And when you look at the aspect that, okay, you know, what's going on in the farming business, bottom line, you know, from the revenue standpoint of commodities, looks like it's been going down. From the mining business, you know, gold's gone up, so maybe they'll start using, you know, some more product. From the housing and construction business, it should go up. Bottom line is that it looks to me, and this is really cool for the economy in general, folks, is that if we put this back, what you're going to see is that Deere is not only going to stay in the consolidation, but, you know, when you can't, Deere's been in a consolidation since 2007, I think. Yeah, it's been at highs since, well, not highs, but okay, but the high on Deere is $94. You're at 87 right now, okay? So what you're going to have is that, bottom line, this is going to make another run for the highs. And, you know, it never got destroyed that much. The consolidation it's been in, 99 is the high and 71's been the low. You know, when you look at the numbers, though, it looks to me that, you know, if you're in the agricultural business, if you're in the mining business, you want to keep your eyes all over this, because what does happen is that at this particular point, you know, if we look at the gold contract, yeah, I think it wants to pull back a bit. But guess what? This pullback will set up the next thrust higher in the mining business. And bottom line is that it looks to me like they're going to need a lot more equipment there. Farming business, what has happened is that the crops themselves have come down so dramatically because there's so many, but it looks like the farmers are going to do all right too. And then when you put that together with the real estate business, which is doing good, it looks like there's going to continue to be quite a few jobs out there. We go take a look at some of the Dow stocks out here today. And this is what you have. You have Caterpillar is up 50 cents. You get Coke down 24. You get, let's see, IBM's down $1.30. Johnson & Johnson is down 9 cents. You get Big Mac off $1.98. JP Morgan is down 11 cents. If we go to the let's go to the banking sector. So JP Morgan, these babies have stayed at highs, no juice whatsoever. Haven't been able to get over the high. Let's go to Berkshire Hathaway, BRK, because Berkshire Hathaway right now, folks, is the largest weighting structure inside the XLF. And if we take a look at the Berkshire, yeah, if Berkshire, so check this out. This is going to be wild. No, Berkshire's going to stay over this number, but the number in Berkshire stay over is $148.03, and right now Berkshire is at $148.74. So that's saying that the highs in Berkshire can get tested once again. We go over to the highs of the last week, that is. We go over to the XLE. Now, the XLE broke topside yesterday and had the juice behind it. $70.26 is the number. If we take a look at this and we put this on the weekly, what you're going to see is that, yeah, on the weekly, it's let's see, 78 million. You do have lighter volume, but it looks to me like it's going to close over the $70.26. And if that's the case, then the bulls and bears are going to be fighting it out next week inside the S&P, not necessarily inside the NASDAQ composite or the NDX 100, because the composite, okay, which is all the stocks in the NASDAQ, bottom line, has come down a few different times with volume behind the move. The composite itself, if you get the close, oh, this is going to be great watching this check out. So check this out, folks. The composite right now is trading at $5,238.08. No, and $239.40 now. If you close under $5,238.50, you can go higher. So as we come into the close here, we're talking about 1 point. Unreal. You have to love it, man. You have to love markets. Our phone number is 877-927-6648. Dow right now is down 33. NASDAQ is almost flat. S&Ps are down $1. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 32. You get the NASDAQ flat. S&Ps are down 1. Let's go to man Carlos in California. Hey, Carlos, what's going on, brother?
Hi, Tom. How are you?
I'm doing great, man. You trading that gasoline?
Oh, yes. I'm getting ready for the gasoline. Actually, I'm only been watching gasoline.
Okay.
But the reason I call you is, have you checked that volume that I mentioned the other day? That usually around the middle of the day, it's usually 11:15 Pacific time.
Okay, so now was this on the gas? I remember we looked at it yesterday, right?
Yes.
And
yes.
this is in the the gasoline contract, right?
Yeah, slash RV. Yes.
Yeah, no, I have it right up there. Okay.
Well, I keep seeing that it spikes a certain time, and then it just drops for a while, and maybe the trend will continue to the direction it was.
Yeah.
But it gives a very good stop time frame, and like I said, it's like you said. I'm sorry. It's possibly the settlement of the day is around that time, or
That's wild, man. Hey, let me just see something else. So when we
it's
take
every single day.
Yeah, no, I'm with you.
It's so predictable.
So let's see. It must. I don't know, but I guess we should check on it to see whether that's when the pit closes. So what happens, folks, is this. This gets really intriguing in the aspect, gasoline, oil, in the gold contract, silver contract. What happens is that they all trade electronically now. But what does happen? Let's say you're trading, gold all night, and the contract opens at 20 past 8 Eastern Standard Time in the morning. Well, the bottom line is that that's when the heavy juice comes in the market.
Yeah.
And they can juice it, when it closes, at 1:30 also. But the 820 in gold, I watch it really closely because that's when they can basically push it whatever way they want. And I'll watch the gasoline more closely.
Another thing, Tom, and can I ask you about the oil price?
Yeah.
Is today a failure or not?
So let's go take a look at the oil contract. And right now, folks, we're trading the October contract. So you're at $48.97. It got over the 49.53, and yeah, we closed underneath it. Yeah, it is. It is.
So we have to watch for confirmation of this failure by next week?
That's right. Now, this is what you'd want. This is how this shakes out. So when oil broke down off the highs, folks, July 7th was a big day. We went from $49.53 to $46.17, almost $3 on this contract, okay? Had monster volume on the way down. That's kind of the break. Now, what happens on a failure is that you got over it, closed underneath it, probably has, I'd have to go back on the other contract and find out what the volume was. But, today we did 514,000 contracts thus far. So what you'd like to see is that you'd like to see volume coming off the high. Now, if we go over to, now check this out, because if you go over to ExxonMobil, folks, this is going to be really dicey in the context of, it's like, okay, why can't Exxon perform? The XLE got up there. Exxon made a high yesterday of $88.94, and today you're at $88.801. We take a look at Chevron. Chevron really did do the same thing. It's like, okay, so both of those are also giving you a decent indication that, we'll see whether oil can get higher. Now, what I would do, Carlos, is this.
Yes.
This bond, okay, you want to keep your eye on the 10-year bond, 10-year note, and the 30-year bond also, and this is why, folks.
Yeah, I have it on my screen. I listen to you.
Yeah. So what happens is this: if in fact this is going to go after the B point of an ABC down, what you're going to get is that you're going to get bonds lower, so that'll jack up the price of the 10-year, well, of all the bonds. It should also put some juice behind the dollar, which the correlation on the dollar, if the dollar starts going higher, that'll put pressure on the oil market and all commodities, notwithstanding that the oil market itself has just had a dramatic run. So your probability goes higher if, in fact, those bonds start going south. And what will happen, folks, is this. Bonds will be active in a huge way before our market, meaning our equity market, opens on Monday morning. Bonds, you're going to get a good feeling, by 8 o'clock in the morning Eastern time or 5 o'clock your time, Carlos. If these bonds have some volume in them, then you could really fire away at being short commodities, because the dollar index also should be moving higher.
Yeah, I'll be watching all night since Sunday.
You are too funny, man.
I really want to get short this, but I'm sitting on my hands and watching this.
Yeah, sit on your hands until you get a confirmation. That's the bottom line, you know.
Yeah, especially last night I was in the den.
Yeah.
And I was on myself, and I looked at it and said, well, everybody's sleeping. Seems like everybody's tired.
Yeah.
And then when the European markets opened, I was so glad I shorted the market, and I got out this morning.
Good for you.
Waiting for the next Sunday, see what happens.
Yeah, well, Sunday, you should have Z from Philadelphia in there with you. He's getting there, you
I
know.
think he was sleeping because
He's got a nerve. He doesn't supposed to go to sleep. What the heck's going on with him these days, man?
Yeah, I tried to follow him. He's a very good trader. And Tom, thank you for everything again, and I wish you a very good weekend.
Yeah, you have a
Take
great
care.
one. Oh, see, look at he's right there. He'll come visit you Sunday night.
He has all my respect. He's a very good trader.
Yeah, no, listen, it's awesome. We're so lucky, man, to have all you guys and girls. It's a beautiful thing. The tigers and tigresses growling and prowling, folks. Come on over and visit us. And, folks, if you haven't test drove the Den, come do it. The Den is amazing. I mean, it just gives you great ideas. You know, it's a great community, man. And there's, you know, great scene. Carlos, you have a great weekend, a safe weekend. Of course, you know, maybe I'll see you Sunday night in the Den. We'll see. Thanks, man. You know, what does happen is this, folks, okay? There's certain times in the marketplace that you have to stay all over it. And depending, you know, I would say whether you're a bull or a bear, you better be all over it next week. Because what has happened is that we've been sideways for a long period of time right now. And it doesn't mean, you know, yeah, granted, you get August. Let me see this calendar for a second. Because what you do have, everyone in the Northeast, there's no doubt, they know that it's curtains in a few weeks. Yeah, so August 19th. Yeah, Labor Day is right around the corner. So realistically, the market only has a chance to move next week. You know, meaning movement both up or down. Because what you have is that we're coming into the following week. That's going to be Labor Day. And for everyone that hasn't taken a vacation, they're going to take off. The market will still be open 5 days, but realistically, I'd say by Thursday of 2 weeks from this week will be like a Friday. It's Labor Day's Monday, and then you get action, man. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrial's down 35. NASDAQ is off 6. S&P is down $1.50. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go over. We're going to go over to the silver market because our man Z in the den. He's looking into the silver market. And so the question was, if it jumps the creek, how far can it go? So the term, folks, jumping the creek, whether it's down or up, is a Wyckoff term. And this guy, Wyckoff, in the 20s and 30s, you know, figured out quite a bit technically inside the market of how these markets like to move. So what happens is that's where the term building cause come from, wide price spread. That's where those exact terms come from. So the silver market yesterday really gave an indication also that it couldn't hold price, and it very well may be an ABC structure on the way down. Now, that was really important. The reason being, folks, is this, is that what had happened yesterday was that the yen went under 100, and then gold went up pretty good. And one of the main reasons there is that when the yen gets strong, bottom line, gold goes to the moon. Okay? When the yen gets weaker, the correlation is gold goes down. Okay? So, because what also happens is that the correlation has to do with the yen and the dollar. Well, bottom line is that what ended up happening is that the yen got back over 100, the dollar got a small bounce, and gold got sold off again. But silver, if we stay with silver, silver was giving the information out yesterday. Because what had happened is that the silver market had gone down on Wednesday with 78,000 contracts. It went up yesterday and didn't hold price with 71,000 contracts and was going into 81. So all you're looking for, okay, what you're looking for, we're looking for where's the supply, where's the demand, and what are you going into? So what we have out here today is this. You have 76,000 contracts. You are at the low that it's been going after is $19.27. Well, we're at $19.31, and you got a big expansion of volume, 76,000. When that happens, you very well could jump the creek. And what jumping the creek means is this, is that the pit is closed right now. What we're going to have in another 16 minutes, the silver contract's going to be closed, the gold contract's going to be closed electronically, and guess what? Nothing is going to be opened until 8 o'clock. Bottom line, when Australia opens up, you know, for 6 o'clock, 6 o'clock Eastern Standard Time. By 8 o'clock, though, Australia opens up and action's going to start. By 9 o'clock, you have Asia opening up Eastern Standard Time, and it's going to start. So the jump would go like this. I take the bottom, which is 1927. This is where this gets really dangerous. You take the bottom of 1927, and then you take the high out here, which is 2083. Well, what do we get? About $1.50. So when you take $1.50, this thing kind of lines up like, okay, man, you know, this thing can be at $18, you know, in a heartbeat. And that would be a monster hit. There's no doubt about it. But that is how silver also likes to trade, folks. When on the 5th of July, silver traded from $19.60 up to $21.25. Okay, so bottom line, it's pretty intense in the world of trading metals. And if silver is going to lead, you're going to see some heavy, fast action. And I think if in fact this is a ABC structure down on the bond market, and it's not going to be the end of the world, by the way, folks, okay? If you got to refinance and all that, go do it. Because we can go up quarter point, half a point, and you're still going to be... The last year, this has been the range of the bond market, of the 10-year bond in the last year. And this has to do with refinances, right? Or mortgages. 1.35 has been the low. 2.34 is the high. Well, we're at 1.57. So you can see that you can go up, you know, a quarter point, and you're still not even at 2. You can go up a half a point, you're going to be at like 2.1, which is still not the end of the world. That being said, what would happen is that the market itself would take a little jolt on that, because the market would be trying to figure out, is that all we're going to get? And that's okay. Or, in fact, has that turned and, you know, we're going to go up a lot higher? My take is that, you know, you have to pay attention to the ABC structure on the way down. There's no doubt about that. And I suspect that that's what we're going to get, because what has changed in this market is this. You know, looking at the S&P, the Dow, the NASDAQ, we're all at highs, we're fat, we're happy, we're all of that. It's like, okay, what's going to stop this market? Well, what can stop it very quickly and stop everything very quickly is free money. That's what it comes down to, because the market loves free money. Everyone loves free money. And what is free money? Free money is when rates stay low, go lower, and if you, depending on how long you've been around inside the marketplaces, I remember the first time that the Federal Reserve actually ever took, it's called taking away the punch bowl. It's like, I never could figure out, why are you going to take away the punch bowl? That doesn't make any sense. Well, bottom line is that the market itself may very well take away the punch bowl. And if that's the case, I suspect that punch bowl is only going to get taken away for, you know, 4, 5, maybe 7 weeks. And the reason for that, folks, is that the Federal Reserve and the bureaucracy has already shown their stripes. And their stripes, they're so paranoid of markets going down, it's amazing, okay? So and this is a global phenomenon. This is not, you know, a U.S. phenomenon. This is a global phenomenon, and that is not going to change overnight. It's just not going to change overnight. They'll come out screaming, yelling, saying, no, we're going to go down another half a point, you know. So, but that doesn't stop the aspect of, like, where things want to go right here and right now. You know, as we're coming into the close out here, and this is where it gets even a little bit more deviant, you're going to see that they're putting pressure in the metals. And so this is going to be the lineup that they're going to be saying, okay, you know, do I want to go home long or short metals? Do I want to go home long or short the dollar? And do I want to go long or short the market? The market doesn't look that bad to me. I mean, that's the reality. You're going to need, inside the NDX 100, we have volume on the way down today. It's subtle, but you have volume. We're already at 15 million. And when you do have something that's this subtle, that's just sucking more people in. You know, because it's like, okay, you go up yesterday with 10 million. We've already done 15 million. So that means we're going to do about 18 million. You know, that is always a danger point, because the danger point goes that they have to get as much equity out as possible without croaking the price in order to basically keep their portfolios in shape. And, you know, bottom line, it looks to me like that's how this whole baby is lining up right now. If we go over to the small caps and we look at the small caps, the IWM is staying at highs. You know, the IWM, let's see, if we close. Okay, so let me give you these closing quotes for failures. On the IWM, it's $122.85. You close under that, you get a failure on the weekly, which is important. We go take a look. Yeah, you stay right there. As soon as we come back, that's exactly what we're going to do in the last segment. I'll give you all these numbers. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow's down 41. Nasdaq's off 1.5. S&P's off 1.75. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So if we go over to, we're going to do some of the ETF structures and take a look at the weeklies and figure out what the failure would be or not failure. In the Qs, it's you close under $117.37, you get a failure. And right now, bottom line, you're underneath it. We're at 117.26. You go to the SPY, the SPY. We take a look at the SPY. We put this on a weekly basis, and we're trading at $218.59. And you close under, looks like it's going to close under the $218.94. And that's also would be a failure. The SPY, if it got down to it's not going to go $218.23. You'd have a major failure. Bottom line, though, in that particular case, it looks like it is going to fail. You take a look at the diamonds. The diamonds, of course, are the ETF structure for the Dow Industrials. And what we have in the diamonds, you're trading at $185.31. And now that gets interesting because that's a big failure. So check this out. This would be, so for the Dow, this is what you have. For the Dow, you have a failure going all the way back from the breakout area, which is where we've been since July 14th. The Dow's trading, the diamonds are 185.33. You close under 185.50. That is a failure. We did 10 million shares, so watch how this works. You got to a price point of this week of 186.87, so you got over all the highs. You only did 10 million shares. Well, we did 15 million on the breakout. So you did 15 million, which was light anyway, the week of the the week of the 15th of July. We got over that. We closed underneath it, and guess what? If you we're closing underneath that with 33% lighter volume. That is a monster failure, folks. Okay, so it's going to be intriguing inside the Dow Industrials as to what is going to get hit out here. SLV. We were talking about the silver market, and the silver market also is kind of showing it through the iShares Silver Trust. This is down 42 cents. It's below the it's below the swing points, and you're below the swing points, and you have some decent volume. That's on the daily. On the weekly, the way this is showing up is that you're already into the bow when it spiked higher. That's 1892, and that's the real danger point. When we went higher, July 1st, you went from 1678 to 1892. Right now, you're into that by 60 cents. So bottom line is that it would need another 40, 50 cents to be into it. Then that would act like a magnet, just bringing it all the way back to the beginning of the breakout area, which, by the way, is a normal situation when you've finished ABC structures on the way up, which, in fact, gold, silver, XAU, HUI, they all had done that, okay? So bottom line is that baby is set up correctly. And if we just go over to the bonds, we finish up with these bonds. I'm going to put this on a continuous contract, TY. Yeah, I'll put the 30-year on a continuous contract. No, let's put the TY Treasury. Come on, baby. There it is. I got it. Okay. So I'm going to put this on a continuous contract, and we'll put this on a weekly. And on the weekly... Yeah, on the weekly, it's saying, hey, guess what? You can go to the 130.21. That's another point down. But that would mean we'll break the swing point. You kind of right into it. You're actually, which is going to be really wild, is that we're at 131.30. 131.25 gets you a lot lower. So that's only 5 ticks, man. Pretty intense. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking right back here Monday morning, 8 o'clock. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.